Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, leading economic historian Niall Ferguson back in Australia to give his rich insights into world order, from the new framework underpinning the US Fed to the US-China tensions and the new Cold War in tech. We catch up with him on the sidelines of the AFR Business Summit. China lowers its growth targets to 6 to 6.5%, raising questions around a slowdown and a new risk of rising debt from more stimulus. We go live to Hong Kong for the latest with Fidelity's Yeung. And rates on hold again back here, with the cash rate at 1.5%. But nowadays there's more talk the next move will be down, not up, from Philip Lowe. Your Money's Leanne Jones unpacks Fed thinking with NAB's Mark Todd. Now, look first to another development on this fraud scandal which has engulfed NAB this week. Rosemary Rogers, the one-time Chief of Staff to former NAB CEO Andrew Thorburn, has been arrested today. She's expected to be charged over the scam lasting 4 years, where her bank was allegedly defrauded of $40 million. It's alleged Ms Rogers was paid $6.6 million in corrupt commissions, so she would continue to approve grossly inflated invoices being sent to NAB by an events contractor, the Human Group. Well, as we reported earlier, the Human Group CEO, Helen Rosamond, was arrested earlier in the week and charged with more than 50 counts of bribery on Friday afternoon. Meanwhile, NAB has released a statement reiterating it is the victim in this matter. It says the alleged fraud was reported by a whistleblower. If the alleged fraud is proven, it represents a most serious breach of trust by a former employee. NAB is the victim in this matter. Police have confirmed that no one at NAB is under investigation, including former CEO Andrew Thorburn, and there is no suggestion of any wrongdoing by anyone at NAB. Well, we've got back the Australian's margin call editor, Will Glasgow. He joins me live at the desk. Will, have you been down to see what was going on?
Sorry if I'm a bit breathless. I've just run back from the local
Thank you very much. Yeah, what happened?
Well, Rosemary Rogers was beamed in from prison. She's been held just around the corner in Surrey Hills Prison, and it was a pretty...
Which is where where Rosamond...
Helen Rosamond was last week. Yeah. So here, that was on Phil Cronican's first day as NAB CEO. Here we are in his 5th day in the role, and the long-serving Chief of Staff to his predecessor, Andrew Thorburn, was today, as you said, charged by New South Wales Police.
She looks a bit different.
She looks a bit different.
Look,
she's lost weight. I'd say she looked like she'd lost 10, 15 kilos. This must have been a very stressful year and a bit as this police investigation's been ongoing. We heard today about the from the lawyers for the police, just some of the detail and to the lengths that investigation's gone to. They said they've got over 100 witness statements.
100?
100, yeah. Now, we know that one of those is Andrew Thorburn. He's given a witness statement and has been interviewed and continues to cooperate with the police on their investigation. As you said, nothing alleged against him, but he's cooperating, giving evidence on this. But 100's interesting because you wonder, well, who else? I mean, how much of that could be, that sounds like a fair whack of the NAB executive team who received that $40 million worth of executive trips, travel, all the rest of it, right?
Yeah.
So they're the people who had the most, the executive team are the people who had the most dealings with Rosemary Rogers, and it looks like, well, from what police said today, by deduction, sounds like a lot of them have been sharing their thoughts on it.
Do we know who the actual whistleblower was?
We don't know who the whistleblower is.
Do we know where the whistleblower... Because there are stories that the whistleblower might have come from Human Group.
Could come from Human Group, and we've mentioned before, I mean, the Human Group was a husband-wife, well, now a former husband-wife business. They've... Helen Rosamond divorced her husband Jeffrey Rosamond. That's ended very bitterly.
Badly,
so you know, there's some speculation that maybe it's come out of the Human Group side. Then over on the NAB side, the possible suspects, or as people gossip about, where could this have come from? Maybe someone on that executive team who thought something was a bit off, or maybe closer to the action, Rosemary Rogers sat just 5 metres away from the CEO, and in that same team was another executive assistant who's been around for most of Rogers' period as Chief of Staff. She'd be someone who'd be familiar with Rogers'
Well, this has been ongoing. I mean, it has been an extraordinary ruse if these allegations are proved absolutely correct.
Yeah, well, look, and the New South Wales Police's lawyer today, they said the strength of the case is strong as they were outlining this. I mean, they've gone to huge lengths before we got to today's charges. And this happened because Helen Rosamond was arrested on Friday. She was arrested at her home in Potts Point and then brought into the police station. Rosemary Rogers has then flown up today at her own expense, flown up from her house in Melbourne, where she's been unemployed since she spectacularly resigned at the end of 2017. So she flew up from Melbourne and presented herself and then was arrested by police today.
So her bail?
Yeah, now interestingly, so last week Helen Rosamond actually spent the weekend in jail because there was a problem processing her $200,000 bail, but that did process on Monday and she's out now and living in her place in Sydney, following the instructions of her bail. Rosemary Rogers' lawyers said that she wasn't able to pay anything like that sum of money because all her assets, unlike Helen, all of Rosemary Rogers' assets have been frozen by the corruption police. So she's only got a little bit of money to live off. So the judge has agreed to bail. She hasn't had to put up any money.
Frozen anyway.
Yeah, exactly. Yep. So they're not worried about that going away. They've already got a huge amount of they've got $7.5 million.
So any idea of where we go from here?
Well, the next court date's March 19.
So not very far away.
No, not very far away. Now, she's not flying up to Melbourne for that one. She was allowed to stay there. Her lawyers will come and represent her. That's just we're going to get a sense then of what the case, what the kind of timeline the New South Wales Police's lawyers think.
Do we think Andrew Thorburn may actually have to turn up at court and present as a witness?
Yeah, it's going to depend, I think, a bit on whether Helen and Rosemary plead guilty or not guilty. But yeah, if this thing gets to a trial, to a hearing, yeah, who knows? Andrew Thorburn and some of those other 100 witnesses, if they're key to the evidence that the police, of course.
So as you say, you know, let's just imagine what would have happened had Andrew Thorburn still been in the role. I mean, this is all happening very, very fast. The police think they've got a very watertight case, from what you're saying. We have, and look, but also, okay, you know, the legal system takes its time. So we've now got, it means people don't have to be tiptoe around, you know, suspected allegations or whatever. We've now got two people charges. We've got the former, you know, almost decade-long chief of staff to the NAB CEO charged with an alleged fraud ring that went on for more than 5 years, pilfering $6 million over $40 million of transactions. And pulling in Cameron Klein, the previous CEO as well.
Yeah, because it runs back into 2013 as well, so it goes back into the Klein era as well. So, yeah, it's sort of, it's an interesting sliding doors, that one. If Thorburn was still there, this was a bad day for NAB. Can you imagine how bad that would have been?
No, I can't. Well, Will Glasgow, let's keep on this story. Thank you very much for joining us. OK, well, what a fantastic time to be the world's most watched and read economic historian. The end of quantitative easing, a new framework at the Fed, the wave of protectionism, or is it, threatening global free trade, the rise of the populist right and the populist left, and superpowers jockeying for tech supremacy. These were just some of the topics touched on by the orator, Niall Ferguson, who was the keynote speaker at the AFR's Business Summit today. I caught up with him on the sidelines. Niall Ferguson, welcome back to Australia.
Great to be back, Ticky.
Really interested in your comments today around the Fed and really the change in the framework there rather than just what Jay Powell is talking about.
Yeah, I think one can't explain what's happened just in terms of a shift in language. There seems actually to have been almost a shift in model. In December, the Fed was still talking about continuing to raise rates. The Fed, I think, was still very much under the influence of staff economists who think all the time about this thing called the Phillips curve, which says that if you get to full employment, there ought to be higher wages and then inflation, and the Fed should try and anticipate that, and if it doesn't, it'll have a problem. That was the kind of, let's call it the pre-Christmas view, and it caused consternation in financial markets because the prospect of constantly increasing rates suddenly made everybody wake up to the new reality, that the world is coming off the monetary medication, the days of QE are gone and the days of zero interest rates are gone, and I think that caused a distinct freak-out at the end of 2018. But what's going on here, I think, is not just that the language has changed to one of patience. because I don't think the data and I don't think the old model would support a pause in rate hiking at this point. So something has happened to cause the Fed to decide to just wait and see and not worry too much if inflation goes above target. Because, hey, we've been below target for so long, a little bit of above target's not going to hurt.
Is this a risk?
I think there is some risk. I mean, history tells us that if the Fed gets that wrong and inflation surprises to the upside, then it can be quite hard to get expectations back under control. That went wrong in 1967, for example, when the Fed paused, inflation surprised to the upside, and, well, you know what happened next. On the back of the Vietnam War and the Great Society, the US entered a period of high inflation in the 1970s. Older people, older monetary policy experts like, say, Stan Fisher, still worry about that. But I think when you look at someone like Richard Clarida, who spent his career in a bond market, he was at PIMCO for many years, in a bond market where rates just kept going down and inflation just kept going down, it's a little hard to imagine the 1970s happening again. So I think the new mood is, let's just wait and see. And if inflation goes a little bit above target, that's good, because we've been below target for so long.
So this is a shift in who's got the power with advice, who's advising the Fed?
I think the FOMC is moving away from the Yellen-Fisher Fed, where the economists kind of ruled, to a new paradigm in which Wall Street figures are going to have more influence. And I think that has big implications for markets. If they're right and inflation doesn't suddenly surprise to the upside, then this could be a big win for everybody. Rates don't go up, we don't have a sudden recession, and everything is awesome. If they're wrong and suddenly we get really high inflation or wage numbers later in the year, then they may have to do a U-turn, and that is going to cause a lot of pain that will be just like the end of last year.
Plenty of commentary around Trump these days, of course. I'm really interested, though, in populism and the rise of this new woman, Alexandria Ocasio-Cortez, AOC. What do you make of her?
Well, I think she's the first politician on the American left to get social media and to realize that there's a way of playing the same game that Trump plays, but from the left. Essentially, the key to this game is to use your physical appearance, which is not a problem for her, but more importantly, your rhetoric, in order to get social media attraction and to get followers. And it's not the facts that should constrain you in the pursuit of followership any more than they've constrained President Trump. So a kind of emotion-based politics is now very much in action on the left, and she's pioneering it. I think typical of what you do if you want to get a lot of traction on social media is to be outrageous. So you have to say things that get people on the other side indignant, and that's the Twitter storm that you actually want. So the Green New Deal, which was really the first major policy initiative that she's launched since getting elected to Congress, was sensational partly because of a supporting document, an FAQ document, a frequently asked questions document, that was full of outrageous stuff that just sent the right into paroxysms. The implication of that document was that cattle were going to be abolished because of the terrible methane they produced, that there wasn't going to be any air travel in the future because that too was too harmful to the environment. And so everybody went nuts about this document. There was a huge controversy, and that's exactly how the game is played. So she's changed the game. And crucially, I think that is moving the debate on the American left, the debate within the Democratic Party about its future and what kind of candidate it should field against Trump in 2020 in a way that could ultimately be quite problematic for the Democrats.
What struck me, and I think some other US commentators, was how she managed to cut through in the cross-examination of Cohen recently. Do you think she impressed there?
Well, she understands that when you've got your 5 minutes to throw a question at somebody, it's a soundbite you're shooting for, and she achieved that as I knew she would. So this is an impressive illustration of how quickly to learn on a job, because let's face it, this young woman was a bartender not so very long ago, and her political career is a truly meteoric rise. But its significance lies in the fact that she's understood what Trump saw a long time before other politicians, that in the new landscape that's dominated by social media, where social media can actually drive the conventional news, the most important thing is to be talked about. And you can achieve that in any number of ways. Remember when she danced into her office and as a response to a video that had gone viral of her dancing before she went into politics? I mean, this is how you keep yourself in the news.
Hasn't worked for Theresa May.
Well, you see, Theresa May can't dance, whereas I have to say that AOC can move.
Interesting shift here in Australia. You talk about the new Green Deal. We're seeing groups like Climate Action 100 Plus pressuring Glencore. It'll move to others. Equally, we're also seeing pressure now on business around wealth inequality. So pressure on investment money to put pressure on companies, perhaps to push up wages. Can you see this around the world, perhaps, as a new movement to try and tackle wealth inequality?
Well, so much that happens in the world today began on campuses, and the notion that there should be a kind of ethical investment strategy really dates back to campus activists pressurizing university foundations to divest, well, from anything they didn't like, whether it was dirty energy or Israel. I mean, the campus left had a whole bunch of targets when this began, and now it's becoming mainstream in just the same way that campus politics has become mainstream in other ways in corporate life. People now in major corporations in the United States remind me of the people running universities 10 years ago, because they have to spend hours of their day on diversity quotas, and this all seems to have emanated from campuses. I think the more focus there is on meaningful change in policy to mitigate the effects of CO2 emissions, the more external pressure there will be on companies to change their ways. And let's face it, there are a lot of sitting ducks here in Australia, which is a major exporter of coal to China, which is the economy that is probably doing the most damage to the environment right now. So I don't think this is going to go away. Whether it translates into a wider set of, let's call them left-wing objectives, like raising pay, I think that will be interesting to see. I mean, we traditionally think of pay rises as being pursued by trade unions. And in the rest of the world, the unions are so weak that that's scarcely happening. So maybe it's going to come from this new direction, pressure on corporate boards from left-wing activists that leads them, names them and shames them into raising wages.
Could you see AOC, for example, taking up this sort of cause?
Oh, completely, because demanding unreasonably high minimum wages is exactly what people like AOC are all about. I mean, they would rather have no corporation investing in their neighbourhood than have a corporation creating jobs that didn't pay uneconomically high wages. That's the way this works. And I mean, I think what happened in New York when Amazon was essentially scared off by the pressure that was being put on them by the left illustrates a central problem that the Democrats now have, which is that there is a big part of their party attracted to socialism, not afraid to use the word, overtly bashing big business, even the big businesses that support the Democratic Party, like their tech companies. And I think ultimately, while this may play well on social media, the content of what AOC stands for is deeply disturbing to Middle America. And I think this will turn out to be a problem in 2020 when the Democrats have to put up a candidate who may well have had to endorse a bunch of AOC ideas. These ideas seem cool now, but they will not seem so cool when there's just one Democratic candidate up against Donald Trump and Middle America is watching.
Can I move to China, the trade war, but particularly the tech war? You said that there is now a consensus, a quite anti-China consensus, building across America, really through the tech prism.
Well, in some ways, the big technology companies are the last to arrive at this party because they have been, hoping for more access to the Chinese market. Think of Mark Zuckerberg running around, jogging around Tiananmen Square in the hope of improving and winning the hearts of his Chinese hosts, or even learning Mandarin so that he could better ingratiate himself with Beijing. Apple is a company that is very exposed to US-China conflict because its business model is essentially a trans-Pacific one, designed in California, assembled in China. So the tech companies are late to the party, but if you look at the way the rest of America is thinking about China, there are really two very striking things that have happened. Number one, since Donald Trump started China bashing back in 2016, when it seemed like an eccentric position, more and more people in the policy space have basically joined his side. Democrats and Republicans, interestingly, people from the national security establishment, people from the foreign policy establishment. From nowhere, in the space of around 2 years, we have built an anti-China consensus that is bipartisan, and you'll find in almost every government agency represented. The other key point is that ordinary Americans, even those who are being hurt economically by the trade war, and that includes a lot of Republicans in Middle America, are on board, nevertheless, with the policy. Anti-China polls surprisingly strongly, even in those places that are being hurt by Chinese retaliatory tariffs.
So even if we've got a company like Huawei now effectively banned from 5G by much of Five Eyes, how do you see that playing out? And indeed, what about this idea of there being two internets in future, one for China and one for the rest of the Western world?
Well, we already have two internets. The Chinese built their great firewall and allowed their internet companies, Baidu, Alibaba, Tencent, to take what would otherwise have been Amazon and Google and Facebook's business. So there already are two internets. The Chinese internet's really quite separate from everybody else's, as you find if you go to China. What's striking to me is that at this point the media has largely focused on Huawei, but actually there's much more going on than just the battle over who does and who doesn't adopt Huawei's 5G technology. What is coming down the pipeline from the US Congress will be restrictions on semiconductor exports to China, limitations on what the Chinese can invest in the United States. There's a whole lot of different ways in which this tech war is going to be waged. And coming soon, I think there'll be much more rigorous scrutiny of artificial intelligence programs in the US and the role that Chinese scientists are playing there. So watch this space. The tech war, or the new Cold War, is just getting started.
Niall Ferguson, you're always fascinating. Thank you so much.
Thank you, Ticky.
He is, isn't he? After the break, Prime Minister Scott Morrison on the attack ahead of the election. We'll discuss tactics with Sky News political reporter Annelise Nielsen next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, the Prime Minister says the next election will be a contest between enterprise and envy. Mr Morrison warns the nation's economy will suffer under Bill Shorten if Labour wins the upcoming May election. In a major speech to business leaders, the PM also claimed the difference between the economic plans of the two major parties are the most pronounced in more than 40 years. Well, for more on this, Sky News political reporter Annelise Nielsen joins me live from Canberra. Now, Annelise, that's very interesting. Of course, it's a lovely line that the Prime Minister would like to make. What are the commentators thinking of the speech?
Well, it certainly has caused a lot of commentary today. We've heard about his politics of envy before, and he was repeating some of those lines we've heard about how you don't have to bring others down to lift yourself up. But probably the biggest talking point out of that speech was his comments about where Labor would leave the economy, because he did veer into that area, which we know is very controversial, where he started saying that Labor would bring the economy to a point where we've seen in previous recessions. But he didn't go quite as far to say that he did think this government would put Australia into a recession, even though he was pushed on the point by the Australian Financial Review's political editor Phil Coorey, who did put to him outright, are you saying that Labor would, if they won government, put Australia into a recession? And he did seem to agree on that, but he has been tiptoeing around it today, wanting to say that he does think Labor would be disastrous for the economy on things like negative gearing, changes to tax for things like home ownership and other shares and investments, but also about their industrial industrial relations changes. He's saying that that is going to be particularly disastrous, but he hasn't come quite as close to saying that he does think it is going to cause a recession if they come into government, because he knows how politically volatile that term is. But we've heard Labor today outraged by the comments. They've been saying that they think it is completely unfair and extreme and alarmist even to be saying that they would put the Australian economy in that position.
Well, it is, and that's exactly why, isn't it? Because if you use the R word, even if it's about the other mob will put Australia into a recession, that is in itself, you open yourself up to being accused of destabilising the economy as a leader.
Absolutely, and we've heard so many defences about keeping the stability of the economy. We've heard that about the Banking Royal Commission final report. They didn't want to upset that perfect balance. We've had ongoing discussions about wage growth and when they're going to announce any kind of interest change, and of course that's something that they're very concerned about, what the impact will be on the economy there. So to then use it as political collateral would be very divisive for many, but he certainly wasn't backing away from that either when he was asked a few times today in a press conference as well about whether he was suggesting Labor would put the country into a recession. He certainly wasn't denying it either.
Did he? I mean, there they were all up at the AFR Business Summit. There, it's full of business leaders. Did he bash big business? Did he take the opportunity to give them another knock around the head?
Oh, well, he certainly took the opportunity to give Bill Shorten a few knocks. He was saying that they're going to drag us back into the dark ages with their enterprise-wide bargaining, with issues around the union influence of the Labor Party, and so he did say that Bill Shorten was going to be absolutely disastrous for the economy, of course. Shadow Treasurer Chris Bowen was out today saying that that was absolute nonsense, but it was a very politically charged speech, and we will hear from Bill Shorten at the same summit for the AFR tomorrow morning, and so we're likely to hear a very strong rebuke, and they've been quite critical about wage growth in particular and standard of living for Australians. We've heard Labor say that those are both going down during the current government's administration, and so that's likely to be something that they're firing back at tomorrow.
Yeah, it's really interesting, I think, at the in the governance conference at the AICD yesterday, and I see Jennifer Westacott today at the AFR summit, the Prime Minister as well in his speech, all pushing on this idea of the power of the industry super funds and their potential influence on corporate Australia. Obviously, the government is now cottoning onto this as well, Annelise.
Oh, absolutely, and we know this is something where it is a bit of a delicate point for Labor, and so they don't want to be discussing that more than they'd like to be discussing other economic topics, but the government has been equally hesitant to be too dramatic in this field either, and especially with the recommendations around super and trustees that we saw come out of the Banking Royal Commission's final report. It's something where both sides will feel compelled to do something, but what that something is still remains to be seen, because it is something that's proving so influential at the moment.
And you think that when Bill Shorten hops up tomorrow, he'll be talking about stability, and he'll have all the great arguments on his side of at least he's got his mob behind him. They're not sort of resigning almost en masse at the moment.
It is absolutely a strength for the Labor Party at the moment, because we know economic management is in the most comfortable space for them compared to where the Liberals like to discuss in that space. But what we have seen is, yeah, you're right, so many senior Liberal ones leaving, with Christopher Pyne and Steve Chobo in the last week. It really has tipped it right over the edge. But it could prove to be an advantage for the Liberal Party, because they're losing that division. It is a lot of the more moderates who are leaving, and so while they won't be able to appeal to that broader base, there are going to be a much more refined group. They're going to be contradicting each other less in public, and they are going to be hopefully pulling in the same direction during the election, because that's what they will really need to get back. We've seen that polls just haven't budged apart from that one Ipsos poll, and so if they are going to make any momentum with the election, they're certainly going to have to catch up to Labor on that one.
Yeah, well, it'd be really interesting. I'm talking to Julie Bishop actually tomorrow morning at a breakfast, so that'll be interesting as well. Annelise Nielsen, thank you very much for joining us.
Thank you.
Yeah, I'm looking forward to that conversation tomorrow. Now, the New South Wales opposition leader has sensationally vowed to sack the majority of the SCG Trust Board if he's elected Premier. Michael Daly made the pledge during an explosive interview with broadcaster and board member Alan Jones.
Sydney's controversial stadium rebuild plan has polarised voters. Now Michael Daly has confirmed if he's elected Premier in just over 2 weeks, heads will roll.
And that's one of the reasons, Alan, why I'm going to sack the board. Good. If I'm elected, the board will go. So I want a new broom through. I know you've been on that board for 30 years.
Yeah, we do the job for nothing. Don't worry.
That's fine. That's
we
fine.
Don't
but
mind.
the board will go.
The New South Wales opposition leader telling Alan Jones on the broadcaster's own radio show he'll be sacked from the SCG Trust Board, accusing the body of not telling the truth about risks associated with the Allianz Stadium rebuild.
Tony Shepherd swore on oath that those seats were flammable, and the next minute we see Stuart Ayres, a friend of yours and others, bragging on TV about how they're shopping those seats to rugby clubs all over the state.
There have been independent expert advice, which we've taken, independent expert advice, that there are no fire sprinklers.
Well,
it's
they're not
completely
now
in breach.
because the board's ripped them all out.
It's completely
under
in
the
breach.
cover of darkness.
Not
Alan.
correct. It's completely in breach of the building code.
Michael Daly reiterating his comments at a media conference a short time later.
I told you on day one I would not stand for this stadium promise. Schools and hospitals before stadiums is not an election slogan, it's a promise.
But 2GB and Sky News host Alan Jones has slammed the pledge and questioned Mr Daly's leadership.
He's got no justification for saying what he's saying other than he is the kind of leader who, if Gladys Berejiklian said it was Friday, he'd say it was Thursday. And of course, sensible people listening will say, well, what's he going to do? Are they going to do to the Sydney Cricket Ground Trust what they've done to superannuation funds? Appoint all their Labor mates and their union mates? Because the history of Michael Daly is when he was the mayor of, the deputy mayor of council, Randwick Council, these people got very favourable treatment.
Mr Daly says only the 2 elected SCG board members will remain, Phil Waugh and David Gilbert, and former Test cricketer Stuart McGill.
Michael Daly says he wants to bring the SCG Trust Board into the 21st century to better reflect the diversity of sporting fans across New South Wales. Right now, only 2 women sit on the 13-member board at the SCG. Both of them will be sacked if the opposition leader is elected as Premier on March 23rd.
I would say, is this person fit to be the Premier of New South Wales? He made obviously a very hot-headed decision under pressure. I want to thank people like Rod McGeoch, who helped secure the Olympic Games and who've helped secure 10 world events to New South Wales. I want to thank people like Tony Shepherd.
Charlotte Mortlock, Sky News, Sydney.
After the break, rates on hold once again. We'll get some analysis from the NAB's Mark Todd next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, let's go to China now. China will cut billions of dollars in taxes and fees, increase infrastructure investment and set up lending to small firms as the world's second largest economy looks set to slow further this year. Premier Li Qiang says the government aims to expand its economy by 6 to 6.5% in 2019, giving policymakers room to manoeuvre as economic uncertainties in China grow. GDP last year expanded at its slowest pace since 1990 due to the trade war and Beijing's crackdown on financial risks, which raised corporate borrowing costs and hurt investment. Well, to help shore up the economy, China's government has penciled in cuts of nearly 2 trillion yuan in taxes and fees for companies. Further evidence of slowing in the Chinese economy, with the manufacturing slowdown spilling into the services sector too. The Caixin survey is still in expansionary territory, but the read fell sharply from the previous month and now sits at a 4-month low. China's banking on a stronger services sector to cushion a slowdown in manufacturing brought on by the trade war. However, consumers have turned more cautious about spending as income growth slows in the face of a broader economic slowdown. Well, for more on all of this, let's check in with Fidelity's Catherine Yeung, who joins me live from Hong Kong. Catherine, it's great to talk to you again. Haven't spoken to you for a while now. Should we be concerned about these slightly lower figures, growth outlook figures?
In terms of the actual target of GDP growth going to 6.5%, if we look at China over the past several decades, it's been really cyclical in terms of the economic cycle. So in fact, with this less cyclicality, it actually bodes well because the economy is going to be starting to be underpinned by structural growth, i.e. the rise of the Chinese consumer, the services sector, and that's actually positive for long-term investors.
Right. I mean, that's been a message that has come from China for a while now. I'm just wondering whether some of the stimulus, and it sounds like there's more stimulus to come, is putting pressure on Chinese leverage, on the amount of debt in the Chinese economy once again, which was obviously something that they were trying to bring down. There seems to be a bit of tension there.
Yes, if we look back at the first half of 2018, after the rally we did see in 2017, we had the issue or the overhang regarding the uncertainty between the Americans and the Chinese trade-wise. We also saw the liquidity environment because of the deleveraging situation at very tight levels. So essentially businesses, they couldn't afford any funding, and therefore we didn't see the capex cycle turn, we didn't see reinvestment into businesses. That then had a negative impact in terms of people on the streets, their consumption levels were down. And so that's why from the second half of last year onwards, we've had this real accommodative easing policy, both fiscal as well as monetary. The risk is, though, now that they overstimulate, like what we saw in 2008, which would have negative ramifications. So it's all about maintaining this fine balance. But certainly, the rally we've seen since Chinese New Year, it has been driven by momentum. Do expect some kind of volatility, but generally speaking, the economy isn't as bad as the market was making out, especially last year.
Right, and what about Chinese A-share valuations, you know, the sort of lead companies?
So MSCI, which is a big global index provider, actually increased on Friday the inclusion of A shares. So it will be effective in different tranches from November this year, from 5% across their indices to 20%. And that's a huge jump. And it really highlights China in terms of, the regulators' willingness and the government's willingness to open up their capital markets. This is just equities. We're seeing a lot of development also in the bond market. And again, from a foreign investor's perspective, this is good. We are entering the earnings season now, so we could see some disappointments in tech as well as consumer-related sectors. But generally speaking, we're seeing a lot of improving corporate governance and balance sheet management, which ultimately is good for investors.
You mentioned tech there maybe taking a bit of a stumble. One would assume this is because of the China-US trade tensions. Just what is the market expecting?
Well, it's not just Chinese companies, it's Taiwanese and Korean companies, and there's a big concern about both smartphone demand being lower, as well as the whole situation with Apple and the supply side of Apple. But the tech sector is more than just these two components, and in fact, especially when we look at a number of Chinese companies, they're huge in innovation in terms of automation, the premiumization of certain devices, 5G and the rolling out of 5G. So they're looking attractive. The downside about these companies is that they're all playing in the same space. A lot of them don't have the competitive advantage in terms of pricing power or patenting their technology, and so you have a lot of players all competing.
Right, okay. So overall, the trade tensions at the moment, how do you see, or how does Hong Kong, China see where the talks are at the moment? Because certainly there seems to be sort of a rather pessimistic view at the moment of any real change in terms of, you know, real agreement on things.
The tariff issue is likely to be resolved. So short term, there's a lot of expectations which are now being factored in terms of some kind of resolution. And the fact the market's down a bit today, given that, you know, again, they're waiting on the actual confirmation. This could come mid-March when President Trump and President Xi Jinping meet. But just because we see a resolution short-term doesn't mean that this isn't an endless journey, or at least for the next 3 to 5 years between these two countries. We have foreign ownership issues between the Chinese and the Americans, or many countries trying to go into China. We have the whole intellectual property issue. We had the Americans really not happy about China's very aggressive Belt Road strategy. So again, short-term, positive, but over the longer term, this could continue to be an overhang and overhang the macro environment in China, which again we need to be mindful of. So it's all about underlying stock selection and the companies that really can deliver good total returns.
Very interesting. Catherine Yeung, thank you so much again. Well, as expected, the Reserve Bank has kept interest rates on hold here back in Australia at a record low of 1.5%. It comes despite souring consumer sentiment and mounting evidence the economy is cooling rapidly. Now marks 28 months since the RBA last moved on interest rates. While it was not a surprise, with the market pricing in no chance of a change, the decision comes amid a slump in housing values and a string of disappointing data sets. Well, for some immediate analysis at the time, Leanne Jones spoke with NAB's Mark Todd outside the RBA headquarters in Sydney.
Good afternoon to you guys. Well, as you've made mention, no surprise with that decision there today, and it's all about that statement. Really windy day out here. I'm joined by Mark Todd from the NAB. Just wonder if there's any wind in the sails for the RBA at the moment, because it very much seems like that neutral bias is still intact.
Groundhog Day, isn't it? It's the same thing. It's very hard for them to offer anything different when in reality we're still talking about the same things. It's about the story of China, it's about trade, it's about property, strong cycle in property around you've made a lot of money, now you're giving some back. It's around property valuations, but people don't trade homes. One of the things I think about is, and they can't speak to that point, is when do people re-enter the market around, okay, now's the time for me to buy the first house. And I think that uncertainty from the people who might be investors start to ponder, what do we do? If you're an investor and saying the main focus around property and its impact on the GDP, you start to ponder who are the winners and losers, like rents going down, they reference that, they reference credit. You know, are banks the beneficiaries around tighter lending, so more conservative? So for the investor, it's very hard to work out where the winner might be when it's also neutral. Nothing is happening. But if they solve for China, as they reference, equity markets have moved forward. Bond yields, when we first spoke about this, it was, oh my, bond yields at 3%, this will be really bad. That really created that catalyst for a sell-off. Well, bond yields didn't breach 3% in any meaningful manner and have rallied since.
Mark, just on the housing market, we note that they recently obviously changed their view, and they said that if prices do continue to fall, that will impact or further impact consumer spending. I mean, is it still yet to feed through to a lot of the economic data points? Is there more time for this whole housing downturn story to play out and feed through to the economy?
Well, is it glass half full? So they talk about employment being strong. So are you feeling bad about your asset valuation? Whereas you see equity markets rally and you don't feel really good about your superannuation. You don't see that touchstone where you feel good about it. So I think it's more about how are the market of people responding. So will we see consumers behave negatively around the value of their houses? It's unsure that that's going to happen. Now, it's important to reference, and they can't, there'll be an election cycle about to hit.
Yes.
So as that hits the wires, what's that stimulus look like?
Yeah.
And if we have a change of government, how do you then think about the tax strategy? How do you think about the government? So you could see a situation where a lot of handouts, and then if there is a change in government, people standing back and saying, okay, what will the legislation look like? Is there uncertainty around a change of government? That might lead to the RBA saying, hang on, what are we thinking about the behaviour of the consumer as it relates to property, behaviours, GDP?
Speaking of the consumer, obviously at the moment we are seeing consumers and households sort of borrowing less, spending less. On the other hand, though, you have businesses that are hiring and investing more. So in many ways, the RBA has a tough, job on their hands.
Yeah.
Do we need to see more stimulus pumped into the economy so that consumers put their hands in their pocket and get out and spend more?
It's very hard for my mind to see a movement in lower rates as the stimulus that it once used to be, because I think people are just conscious of the asset price moving around impacting them. It's not the cost of the asset, it's the asset itself. So the first thing you need to do nowadays is put more equity. You have to put more money in. So having done that, what is happening to that price movement, and will the cost of the borrowings really impact by 25 basis points? I don't know that it's going to impact enough to change the behaviour. I referenced the election cycle. I think we've just got to get that through that, and then make the decision on what the behaviour starts to look like over the medium term. So if China gets solved, we have an election, everyone's calm, everything moves on, then you'll start to see markets progress, and then people feel confident. Okay, we go back into the economy is in a pretty reasonable shape. Just not everyone thinks about it because the major asset is property. So it's tactile, everyone's aware of it.
In terms of rate calls, more and more economists are sort of pointing to rate cuts this year, and obviously Andrew Ticehurst there at the desk. We've got AMP Capital also calling Westpac. What's your view from the NAB, particularly if we start to see a slowdown in that GDP read tomorrow?
Yeah, the economist team are still not calling for a rate cut. I think what they're saying, and that makes sense to me, the RBA, so one is, and I'm not referencing Andrew himself, but one is telling the RBA what they should do, and maybe you could say, well, what do you think they will do, which is different. And I think they will sit on their hands, and I can see the sense of why there's a lot happening outside of the bubble that will impact the economy more than moving at 25 basis points or 50 basis points. It may 50 basis points will obviously move it a lot. But I think there'd be more circumspect in moving because it's a currency story and what they want to do with the economy rather than moving when really you've got to solve for China, you've got to solve for an election. Once that happens, then make a decision on what the right rate is.
Australia is experiencing one of its weakest housing markets of the past 10 years as prices fall 5% on average, according to the latest figures from CoreLogic. But there's one capital city that is bucking the trend.
As property prices in Melbourne and Sydney slide, a surprising star is starting to rise. Brisbane is experiencing a 7% jump in median land prices to $455,000.
In Brisbane, that 7.1% on residential is over a 2-year period because I didn't value last year, so it's from 110.16 to 110.18. So it's a 2-year movement, sometimes it's even longer.
Inner city neighbourhoods scored some of the biggest gains, with Wollongabba up 26% and Auchenflower and Paddington close to 20%. A few outer suburbs are also achieving unexpected increases. Residential properties in Rockley, just 10 kilometres from the CBD, are up by 31% and 17% for industrial blocks. It's believed that migration to the more affordable Sunshine State is not only increasing property prices here in Brisbane, but all the way from the Gold Coast north beyond Cairns.
Cairns is another regional centre that is performing well, both interstate and international migration. Tourist numbers are up, and that's having a very good effect on the market. So we're reporting positive movement there, and heading down the coast, Noosa, Sunshine Coast, also some signs of strength and positive increases into the southeast.
But it's a different story for units in the River City, with an oversupply seeing them stagnate.
Brisbane's seen a large volume of apartments come on the market over the last couple of years, and that's kept house prices low, and they're around about zero house price growth at the moment, which is a good outcome. That's an indication to us that the supply and demand for housing is around equal, and that's a good indication for builders in that area.
The Reserve Bank Governor is hoping to quieten any fears over a national house price correction when he makes a housing market and economy address in Sydney tomorrow. Christy Coulter, Sky News Brisbane.
After the break, we'll get the latest on international news headlines, including a new investigation into the Trump-Russia probe.
Now, back to Ticky.
Welcome back. US President Donald Trump will soon face fresh questions over his alleged links to Russia. As Fox News reporter Lauren Blanchard explains, the committee will speak to more than 80 people connected to the president.
A new investigation into President Trump gets underway today with a massive document request from a powerful congressional panel.
It's our job to protect the rule of law. That's our core function.
President Trump facing increasing scrutiny from lawmakers. The House Judiciary Committee requesting documents from more than 80 people and entities connected to the president. Donald Trump Jr., Michael Cohen, and the White House all receiving letters asking for information.
Impeachment is a long way down the road. We don't have the facts yet, but we're going to initiate proper investigations.
Special counsel Robert Mueller and the Southern District of New York, which are both investigating the president, are aware of the move. The probe will focus on three main concerns: obstruction of justice, public corruption, and abuses of power.
This is all about tearing the president down. I'm not saying the Republicans wouldn't do the same thing if the shoe were on the other foot, but this is all part of the reason that the American people don't trust Congress and don't trust Washington.
President Trump maintains he is innocent of any wrongdoing and frequently refers to the investigations into his conduct as a witch hunt. Still, the White House says officials will review the committee's request and respond at the appropriate time.
I cooperate all the time with everybody. And you know the beautiful thing? No collusion. It's all a hoax.
The House Judiciary Committee chair is asking the White House and others to respond to the request by March 18th, 2 weeks from today.
British Prime Minister Theresa May has declared Salisbury open for business a year after the Novichok attack on Sergei Skripal and his daughter. The botched assassination attempt led to the death of 44-year-old Dawn Sturgis and a year-long clean-up to remove any trace of poison.
Customers call this place the cleanest restaurant in Britain. It's 12 months since the Skripals sat down here for lunch, not knowing they'd been targeted with the nerve agent Novichok. Now ZZ in Salisbury is back to normal.
There's a lot less tension in the air around the city. I'd like to think that ZZ reopening was quite a big part of that, in the sense that we are going to reopen as a city and move forward.
To mark the anniversary, the Prime Minister was back in the city.
What I've seen today here in Salisbury is the tremendous spirit and resolve of the people of Salisbury. The message they've given me today is this is a city that is vibrant, it's dynamic, it's a wonderful place to come and visit.
Downing Street also tweeted a message of support, but the picture showed Bath, another fine city 40 miles away. It was quickly deleted. The former spy Sergei Skripal and his daughter Yulia both survived the attack last March. The discarded perfume bottle from that incident was found in the summer by Charlie Rowley. The Prime Minister met him, as well as relatives of Dawn Sturgis, Mr Rowley's partner, who inadvertently sprayed herself with the nerve agent and died. Also on Mrs May's itinerary, Susie Mason's shop.
We are really appreciative of everything that the government has done, but we just need a bit more continued support.
She believes the hit every business has taken should be kept in perspective.
We do try and keep bringing it back to the fact that a Salisbury resident did lose their life, and that, you know, as a community, we all felt that, even if we didn't know them personally.
Whatever has changed here in that time, the investigation, the biggest counter-terrorism operation the UK has ever seen, has not resulted in any suspect being questioned, let alone convicted. It is still a crime without a conclusion. The Russians who have been identified as the main suspects are still in Russia and are likely to stay there.
There's no bilateral extradition treaty with the Russians, so we're never going to have a legal determination that these two protagonists were guilty of conspiracy to murder.
Very few people here have time for the international war of words. They don't want to forget, they do want to look ahead and put the Novichok poisonings behind them. Tom Parmenter, Sky News, Salisbury.
That's all for the show tonight. At 10 o'clock tonight, you can catch Huawei Australia Chair John Lord, and tomorrow night, outgoing MP Julie Bishop ahead of International Women's Day this Friday. Thanks for your company.